and you're going to get kicked and you're going to get punched, and you should just embrace that. Like, if you're not having weird things happening to you in this process of purchasing these properties, you're not doing it right. I mean,
What's going on, everyone? Welcome to another episode of The Remote Investor. I'm Michael Albaum, and today I've got a very special guest joining me today. He's a short-term rental investor, married to one of the number one short-term rental agents in the country. Luke Carl is going to be hanging out with us, talking to us about the short-term rental space and how it's evolved into what it is today and what we need to be aware of as investors, and if it even makes sense to continue investing in it today. So let's get into it. Luke Carl, man, thanks for coming on and hanging out with me. I really, really appreciate it. For anyone who has been living under a rock and maybe doesn't know who you are and what it is you're doing in real estate, give us the quick and dirty, man. Who are you? Where do you come from? And what you're doing in real estate today?
Yeah. Life is wonderful. I started in real estate in 2012, give or take. My wife and I, well, let me back up and tell that story. So Avery Carl is my wife, and she's like the undisputed president of vacation rental, short-term rental.
Without a doubt.
Yeah. I mean, listen, she runs the show around here, Short-Term Shop, which is my full-time gig. And we're very proud of her. She works hard, and I know she's been on your show, and she's just a wonderful human being, and she's the mother of my children. And it's great. She's great. So, I'm married to a very large driving force in real estate, specifically in the sales realm of real estate. And of course, we have the real estate team, of which I'm not a real estate agent, but I'm a full-time landlord. Another way you could put it, I suppose, is I'm Avery's property manager. So we've got apartments. We've grown and scaled over the years, over the past, 14 years or something. Starting with just a couple of rental houses back before we even knew what Rich Dad was, and just grew slowly at times and leaps and bounds at times. Of course, the COVID market was nice to us. It was to most people in real estate, and the last few years have been a little tough, that kind of thing. But we've now got a pretty large portfolio with no partners, which is something I'm very proud of, and it's very difficult to accomplish. And I've got apartments in the Midwest, in my home state of Nebraska. I've got single family long-term rentals and duplexes scattered all over the Southeast. And I've also got, of course, the short-term rentals, the vacation homes, which is our bread and butter. Avery's written the book on vacation rentals. By the way, she has a new book coming out in February called Smarter Short-Term Rental, which has just recently been announced. So I'm very happy to mention that.
Where can folks find it?
Bigger Pockets Publishing. Again, Avery is she would never say this, but she is the only person to ever have a short-term rental book that was not self-published. And now this will be her second. So we're very excited for that one to come out. Bigger Pockets Publishing, and it's already on Amazon. Very inexpensive and cheap at twice the price. But
love it.
Yeah, so new book comes out in February. But yeah, we've got vacation houses, again, mostly in the Southeast, Tennessee, Florida, et cetera. And yeah, man. So I'm a full-time property manager. I've also taught many people how to become better landlords that have come through the short-term shop's doors, purchasing houses with the shop, and we teach courses. We have memberships. We have all kinds of stuff, most of which is free for people buying a house with the shop. And it's a brokerage, so EXP is the broker, and that's what the shop does. And I handle the education side of things for the shop. So I've been teaching people how to be vacation rental landlords for a long time now, since, I guess 2016 was when that whole thing started.
I love it, man. Well, we are going to have a ton of fun today talking about this very topic, because I think it's something that's so top of mind for so many people. They hear about short-term rentals. They see people like yourself talking about short-term rentals. They see Avery and they're like, oh my God, I have to do this. And so we're recording this at the end of 2024. Interest rates are still higher than they've been for a while. The market is still more expensive than it's been for a while. So let's just like shoot it straight, man. Are short-term rentals still a thing? Does it still make sense to buy them in this day and age?
Yeah, I mean, so of course I'm going to say, yeah, that's what we do, right? But no, I mean, to me, this is a fantastic time to buy compared to the past. It's been rough. It's been real rough, but now we're to the point where nobody's buying anything. And it seems like the economy is maybe starting to figure itself out a little bit. The stock market seems to be doing pretty well. Interest rates, who knows what's going on there? It's a mess every day, really. But I'm shopping. I just closed something last week, actually, and there is zero competition when it comes to buying real estate, not just short terms. We can get into the deep details of that aspect of things, but just buying nationwide right now, I think is a fantastic idea. I mean, it's working for me because there's no competition. The hardest part right now, as I'm sure you know, is these sellers are just completely unrealistic and living in the past. And you got a lot of sellers that are just throwing darts at these COVID numbers, saying, I don't really care to sell, but I will if I can get this number that my neighbor got in 2021. So I think, honestly, when it comes to buying deals right now, which is, I think, at least partially what your question was, to me, a lot of it has a lot to do with when did they buy it? Did they buy it in 2016 for, 40% of the market value today, or 60%, whatever it is? Or did they buy it in 2021, right before the interest rates skyrocketed? So, they bought it at the peak price point. They have a super stupid interest rate, like 3%. So they're able to make it work at that high purchase price. But if they were to go to sell it today for that same purchase price, that new owner is going to be at, at least double the interest rate. So that doesn't really work for that new owner. Therefore, the properties are just sitting there doing nothing, so. Yeah.
No, so I totally hear that. I'm wondering, give us the details of this most recent deal.
Not a good example. Personal property. It's actually not even a rental, but I will give you the purchase details. It was the original asking price on this thing was like $899.
Okay.
2 years ago.
Where is this?
This is in the Southeast.
Okay.
So 2 years ago, give or take, they listed it for sale. I ended up getting it for I think it was $623. So,
wow.
Yeah, over $200,000 off the original asking price. And they had no interest in this property at all. So we felt like we got a pretty good deal. And here's how we did it. This is what's going to be of value to the listener. What happened with us, it was a personal, again, it was a lifestyle deal. And we decided we were going to do this. And we'd been shopping for something like this for quite some time in different markets, and things weren't really working. So finally things started to click in this particular town. And we got it narrowed down to 3 units. They're condos. Narrowed down to 3 units. And we couldn't decide. It was both Avery and myself. We couldn't decide. We were both kind of equal on all 3 of them. And so we said, let's just start throwing offers and see what happens. And it was within 24 hours, it was a clear-cut winner. This seller really did not want to deal with this damn thing anymore, and they were ready to get out. This seller thought that their, crap didn't stink, and they had a number that they were not willing to go below. And really, in my opinion, it felt like it was just out of spite, And then this other seller over here was almost like, forgot that they even owned this thing and didn't even want to budge on the price because it was actually the developer of the building, and they had 7 units, and they already paid the bank back, and these extra 7 units were just kind of gravy, and they didn't care, and they didn't want to lower the purchase price because it would affect the values in the building, and they were the developer and that whole thing. So that one got ruled out also. So we went back to unit number 1 and kept asking for stuff, and they kept saying yes, and that's how we got the deal. And I think that that's exactly what's going on nationwide right now. I mean, you can't really pinpoint the entire country's real estate market as a whole, but to me, It's a wonderful time because you got time. You can be patient, decide what you're looking for, but that leads to analysis paralysis. But then the way you fix that is start throwing numbers at these damn things and see who's really ready to deal.
Yes. Yeah. No, I love it, man. And that's something that I always talk about too on the show and in my education platform, is just that making offers is free. Because we run the numbers, right? We have this idea in our head of what something is supposed to be. And then we get out into the real world and get punched in the face and realize, oh man, we better go back to the drawing board because our perception is not reality. But you got to go test these things.
Yeah, no, absolutely. Get punched in the face. You need to get punched in the face. I see too many noobs, which, by the way, I love noobs. It's not, the way I said that sounded a little bit condescending. And I didn't mean it like that, because noobs are wonderful. I love, especially when they're coming to class or whatever. People that are new are, first of all, they're excited. And second of all, they don't have any bad habits yet. So being a noob is a wonderful thing. It's what I miss it. I just remember being new and like just question after question after question. And that's just such a great way to be. Yeah.
And they're not jaded either.
Yes. Yeah. Yeah. It's like, oh God, how many sinks are going to be leaking today? Right. I don't even remember what the original question was, but I poked fun at noobs. What got to that?
Well, just people getting punched in the face, like testing your theory, taking it from theory to reality. You started throwing out numbers, and that's what you were encouraging people to do.
Yeah. Get punched in the face. Too many noobs, like they don't know how to take their punches. Literally, like what you just said. And you're going to get kicked and you're going to get punched. And you should just embrace that. Like if you're not having weird things happening to you in this process of purchasing these properties, you're not doing it right. And there will be times where the universe is speaking to you. So keep that in mind. If you're having like an absolute brutal time of trying to make a deal, that's maybe the universe telling you that's not the deal you're looking for. And if you pivot and start to move to another town, for instance, in the vacation rental, the STR space, that's very common. We're pivoting markets pretty often. So, maybe you pivot markets or pivot from a condo to a single family or a townhome or whatever, and then things start to click, then yeah, the universe is probably saying, this is where you need to be, or maybe some sort of higher power, whatever you believe in, but until you go out there and get kicked in the face and punched in the face, you're not even going to know what that's like to learn, okay, it's time to pivot,
I think that makes so much sense. And I mean, like going off of that, how do you know when it's time to pivot? Because I feel like you are going to get punched in the face and you are going to get punched in the gut, but that just might be what it takes to get the deal done. And so how do you measure of like, okay, this sucks versus this is insurmountable and I need to go pivot elsewhere?
It's a difficult question for me because when I first started, it was a whole different thing than it is now. When I first started, it was, how can I get $200 more in cash flow to get myself set up so that I don't have to worry about my boss firing me,
Right.
And then, I think people get spoiled. Like they have one good deal or one good flip and they make 150 grand and they easily forget about what real life is like with that, needing that $200. So, today it's a different vibe where I'm grateful for every second of this. But today's vibe for me is more like, is this property going to be worth the pain in the ass,
worth all the headaches.
Yeah. So I'm grateful to have killed myself, quite literally, doing this, self-managing from a distance on long-term rentals with a day job while having babies and, just all the crazy stuff that you have to go through to kick and scream to get to the point where you can rent a Lamborghini and put it on TikTok and look like you're cool.
You're destroying everyone's secrets, man.
Well,
you're pulling up the curtain.
It's not a rental. Yeah, it definitely is. But anyway, I mean, I wouldn't want. It's funny because I'm joking, obviously, but when I was a kid, I had Lamborghini posters all over my wall, and today, there's no way I would want something like that. Pain in
That's
the
so
ass.
funny. That's so funny. Yeah, I did too. Mine were all red and blue. Man, I'm curious, Luke. So like you guys self-manage everything, right? You don't have anything under management?
We do.
Like professional
Yeah. I
management?
have right now at any given time 3 to 5 third-party managers. Yep. But I do have my own property management company, so it's kind of a mishmash.
Okay. All right. So when you and Avery were first getting started doing short-term rentals, in her book, she talks about how to manage, in her first book, she talks about how to manage those remotely, how to set up the systems to do that successfully. And so I'm curious because you make a great point. Like a lot of people who are just getting started in the space do have a full-time job, do have families, do have other stuff going on. And so when we talk about self-management and everything that's involved, it can feel really overwhelming. So I'm curious, like, do you think still today that self-management in today's day and age still makes sense, or should folks just getting started look to turn things over to a manager, get things set up running smoothly, and then maybe look to take on management in-house?
Fantastic question. I like the way you asked the question too. So for me, I'm always going to be in-house on the vacation rentals, the short-term rentals, if you will. And the long terms, it depends on you personally. I did self-manage my long terms until I got to about 22 doors or something. And then honestly, the reason I switched to a property manager is because we moved to a different state and we were even further away and life was getting busier and busier and I just didn't have the time. So I would recommend that you start self-managing on every type of real estate so you can learn how to work with a property manager. I see too many times where people jump right in with a property manager and they get taken advantage of, or the things just go by the wayside and the property goes to crap and they don't even realize it, stuff like that. Because you do have to manage the manager. It's been said a million times, but it's 100% real. You've got to manage those managers and you will get better at it over time. Certain managers need to be managed different ways. I'm sure that at least 2 of my property managers, if they were on this call right now, would say that they would like to punch me in the face occasionally, stuff like that. But to me,
that's how you know it's a good, healthy working relationship.
Absolutely. But the short terms, I think that's where they shine really, is that you can do it yourself. But there's so many softwares involved in short term, it gets a little easier.
Yeah, that makes a lot of sense. You can leverage technology a lot more effectively, it seems like, in the short-term space than in the long-term space.
Yeah, absolutely. There's, literally hundreds of softwares for short-term, but there's a lot more moving parts too. So I can understand coming into it, it's so daunting. Oh, I got to hire a cleaner. I got to do this. I got to do that. But, at the end of the day, it's pretty simple stuff. It really is, and the biggest part of the gig is dealing with personalities. These people, there's a lot of emotion involved with these vacations, and you got to make sure your house is ready for the expectations are set and stuff like that. It's a lot like if anybody's ever bartended or waited tables, worked in the wait staff world or in a restaurant or a bar, it's almost identical. I owned a bar in New York City, actually. That's another crazy long story. Avery worked there for a minute. This after we met. That's not how
I was going to say. I was like, whoa.
No, that's not how I met her. I met her at a rock concert, actually. But she was bartending at a different bar. We were kids, So, but yeah, it's very similar. If you have any experience in waiting tables or being behind a bar, this whole overnight rental thing is it's really almost identical as far as the interacting with the guests.
Okay. Well, that's really good, I think, for listeners to hear. I'm curious, Luke, from an underwriting perspective, when you're looking at a deal, because I've seen people screw themselves on this big time. They're like, I'm going to self-manage, whether it's long-term or short-term. So I'm underwriting the deal like I'm self-managing, and look how much cash flow I'm going to make. Fast forward 5 years, they're like, I hate this. I'm not good at this. I need to turn this over to a manager, but I can't because I'll be negative cash flow. Are you still underwriting your deals as if you're going to hire a manager and give them that percentage or that payout? Or are you underwriting things because you're committed to this as a self-managing?
Great question. I think if you're looking for a a warm fuzzy. Like sometimes you hear people say you need a backup plan that you can put a tenant in there and it'll still make a couple of bucks.
Right.
This I disagree with. If you're in a vacation town, which is that's where I buy these things and where I live. We live in a tiny little town, like the Walmart down the street from my house right now. If you go in there right now, it's empty because I'm in Florida, and it's not just Florida. It's a vacation beach town in Florida. And literally, I was just there a minute ago, and I'm like, man, this place is a ghost town. It's completely empty. But if you go there in June, there's a line a mile long just to get in to buy beer,
Wow.
So in a vacation town, you don't have that out to rent it long term. It's just not going to work. Now, if you're super uber wealthy, which is very common in a lot of these beach style towns anyway, where these houses, there's houses in the town I live in that are like $10 million, and that's kind of normal. Obviously, I don't live in one of those, but we won't get into that. But anyway, so there's tons of super wealthy people out there that don't even really care that much. Okay, yeah, we got it with this property manager. It's doing okay. They might not even have a mortgage. Kind of sick of renting it overnight. Maybe we'll put a tenant in there for a couple years and put it with a different. That's going to be a different property manager, in my opinion.
Right.
Good property manager. Me too. A good long-term rental manager is not going to do short-term right, and a good short-term manager, in my opinion, is not going to do long-term right.
Yes.
So glad we agree. So I think that the backup plan is to put it with a property manager rather than put a tenant in it. But a property manager in short-term is, the one you're looking for is probably going to be 25 to 30%.
Yep.
There are people that'll do it for less, but they're probably not if you're listening to this podcast, the less than 25% manager is probably not going to do the job, So I guess to answer your question, or just to throw another third scenario in there, the tenant, the property manager, or we got to make sure that it's worth more money when we go to sell it in 5 years. And that goes, again, for me, that goes for all real estate. I heard a statistic one time, and I believe it was from, I think it was David Green. And it was something like 50% of all real estate is sold in the first 12 months after it was purchased. So
really?
Yeah. I don't know where he got that number, but it really burned in my brain. And we do see that a lot. We sell real estate, so we do see people that turn around and sell it. Nowhere near 50%, I don't think, but I wouldn't be surprised if that statistic was real. So, there's a pretty good chance that in general, you're going to end up selling, 4 or 5 years, like you mentioned. So just make sure that you can, do a little bit of rehab, that kind of thing. That if I can give you real advice, be okay with breaking even after 3 years. That's what I would say, man. With a rental property, there's a risk there that you're not going to like it, whether you have a manager or not. So I would recommend that you be okay with breaking even when you decide you don't like it.
I think that's really good advice, because I hate to see people get into deals like, oh, I have to make money on this. I'm like, well, if you have to make money on it, you probably shouldn't be putting this money into it, because like you mentioned, there is risk involved. So I think that's great advice. I'm curious, Luke, for the people and it's funny, you say, 50% of real estate is sold in the first 12 months after buying it. In my head, I have this alarm bell going off. I'm like, yeah, well, 91% of statistics are made up on the spot. I don't think that's one of them, but I'm just curious, from your guys'
I wasn't willing to take responsibility for this.
Yeah. You pointed, David Green said this for sure. Yeah. David Green. I'm curious, from your all's experience of the people that are turning around and selling that stuff within the first 12 months, is it because they don't like it? Is it because they realize they made a mistake? Or is it because there's just now massive equity and they're going to take the upside?
It could be all of the above. I'm going to look at it from the perspective of this person, right? They got a day job, of the seller, I suppose. They got a day job, and what happens is they've had it for a year and a half. It's not fun anymore, vacation rental.
The allure is worn off.
Yeah, it's a lot like a boat. A vacation rental is a lot like a boat, except for if you do it right, you don't lose money. Like you're losing a lot of money on a boat. Let's be real. But if you do a vacation rental right, And again, there's a million different ways to do short-term rental, but what I'm talking about is back to this vacation town thing. Like if your family wants a property on the beach, it's very fun and sexy at first. It really is. I have so many people that just love it, and house husbands and housewives that they feel that it gives them a purpose, and maybe they're suffering from empty nest, and it gives them something to do, and it's kind of fun. But occasionally you get somebody where that wears off, and then all of a sudden they're like, oh man, it's been a year and a half and I don't really want to spend 15 minutes a week adjusting my prices, so then they end up exiting. We see that pretty often.
Yeah, that makes sense. Man, it's funny you mentioned like it stops being fun, or it stops being, or the fun factor is outweighed by the inconvenience factor. We own property over in Portugal, and we're kind of having this discussion, my wife and I, right now about it. Like, man, we loved the thing. It was so fun. It was so sexy, and it cash flows a little bit, but I'm like, do we really want to have this much equity sitting over there in Portugal? Does that make sense? And dealing with all the paperwork and the translation and this and that, sort of like, yeah, maybe it's time to just offload the thing.
Yeah. And I think that can happen in any asset class. It doesn't have to be just a vacation rental. And I mean, honestly, I think it probably happened more in long terms because you're not using it. It's not sexy at all. You're not going to post a 3-2 brick ranch on Instagram and say, oh, check out my rental house. I mean, nobody cares. But if you have a condo on the beach with a view, you're probably going to be like, posting it on Insta and showing it off a little bit. And so it's fun and sexy. And I think the appeal definitely wears off a lot faster in long term. But again, that's just good landlording. That's how you and I have been doing this for a long time. I don't let it wear off. It's my job. It's my gig, dude. I mean, what am I going to do? Just wake up one day and say I don't want to do my job anymore? Then, my kids won't respect me.
Right. That's tough to do. If you figure out a way to, let me know.
And I'm proud that I worked my ass off, killed myself all these years now to get to the point where this is my job. This is what I wanted out of life. This is what I wanted. And I worked my rear end off, and I hung out with guys like you and listened to podcasts and read books. And now I'm grateful to be able to be annoyed by my properties.
Yep. Yeah. No, I think that's great, man. I think that's great. I'm curious, do you have people like when you chat with them, especially because you work with newer investors, that are like, man, you had it so easy, or like when you started investing, it was easy, and of course you're here now, and like, I can't do the same thing you did. Do you run into that much?
Yeah, of course. Yeah, absolutely. And it's funny because I look back, I'm like looking up at the sky, remembering things right now. And I remember when I first started. First of all, there was no softwares in vacation rentals. Avery and I were really kind of walking on new territory. Now, here's the thing. The truth is that people have been renting vacation houses for hundreds of years. So this is not a new concept. But Airbnb,
not a new concept.
Airbnb redefined it. They made it so that your mom knows what it is, That being said, Vrbo's been around for 1996, so way longer than Airbnb. But
yep.
When we first started, there were no softwares at all. I've been on Airbnb since 2011 or 12, which is really when they got put on the map by a Super Bowl commercial in 2012, maybe 2011. Okay. So it was right around that time that I got on there and started using it, and, early adopter. And when I first started, again, no softwares, no management softwares at all. There were no, it was very difficult to find a cleaner. That kind of thing. So, but looking back on it, just more in the real estate realm as a whole, the old dudes were telling me, you're too late. I was buying in like 2012, 2013 when I first started. And, so we're 5 years off of 2008.
Right.
And so like the heyday for these dudes that were telling me this was probably like 9 and 10, right?
Yeah. Just after.
So they're telling me I'm 3 years late. I can't make any money. And I'm just going out there and buying everything I get my hands on, which was a slow process. We were grinding down payments, living very, very frugal, which is not my style. I like to have a little fun in life, but we did it for a number of years where we were just on a extremely strict budget because we were laser focused. And back then, every time I went to buy a deal, it was like trying to force a square peg through a round hole, man. It was the same as anybody getting started now. So two things to say about that. With the economy and the market, everything you're hearing now, I was hearing the same crap back when it was actually, by today's standards, pretty easy.
Right.
And then for the people, I had to trailblaze. I had to send messages manually to my guests. I had to block off my Airbnb calendar if I got a Verbo booking. I had to price 365 squares on my calendar times 2 platforms, multiple times a month. You're going through and redoing every one of those squares. And today, there's so many ways that it's so much easier. I think the housekeeper alone in today's world, compared to when I first started, like, they were almost afraid to come work for the individual owner. What is this Airbnb thing? I don't understand this. This is crazy. I'm going to stay working for my property management company because I feel comfortable and they have like a company car. As opposed to coming working for you. You're just some dude with long hair that I don't even know if I can trust, So today, now it's never, ever going to be easy to find a good employee of any kind. All right. So, but at least today's housekeepers understand the concept, So it's definitely in many ways much less difficult. I think today, as of right now, where we're struggling is too many people thinking that this is some kind of gold rush like 2019. You're coming in with these real unrealistic expectations.
I bought in 2021 in the peak of the market in a market that I know you and Avery know real well, the Smoky Mountains. And I bought a condo and it just was not performing well. It wasn't performing as we expected it to. And the property manager I was dealing with sucked. And I found a new property manager to handle another one of my properties out there. And they were great, but they're like, this condo is a little bit too small. But so what I did is I was like, you know what? I put on my long-term investor hat and said, screw this. I said, I don't want to sell it because I've got a 3.25% mortgage on it. I said, I want to find somebody who wants to arbitrage this thing. And if I can make my nut, if I can get someone to pay me the fixed rent, and so I can make X% return on my investment, which is what I would on a long-term rental, I'll let somebody arbitrage it and they can make the overage on it for the short term. And so I put it out online and a guy reached out to me and he's like, I'll take it. I'll do it. And so I was asking him about it. I'm like, hey, what's the deal here? Who are you? What are you trying to do? And he goes, well, I've always been wanting to get into the short-term rental business. I don't have the funds for down payment, but I own a cleaning company. So I'm cleaning all these cabins. I see what people are doing. I'll pay you the fixed rent. I'll go figure this out. It's low stakes and low barrier of entry to me because I got to give you a deposit, but it's already furnished. Is this good? And I was like, yeah, that's awesome. And so he's now running this thing. He's doing the short term. He's doing the self-managing. And I think he's doing actually quite well. He's paying me what I'd be making on it if it was a long-term rental. So I'm happy. And I'm like, this seems kind of like a win-win. Have you ever done any kind of arbitrage stuff or seen any folks do that?
No. In your situation, I would do exactly what you did. Don't buy condos in the Smokies.
Where were you 4 years ago, man?
I was
a little too late.
I was here waiting for you. I should have drove an airplane over your house. Said, call us first.
Right. Yeah. And written it with the tail smoke.
Yeah. But yeah. So we have that market. I mean, that's where we started the company. We lived in Tennessee for a long time. I love that area. I mean, I wish I could be there all the time. And I will be, I think, at some point in the future, more often. But we lived there for a long time, and we have it down to a science. So we could have definitely helped you there. But in your situation, I think you did it right. Why bother dumping it when you can get somebody to come in and rent it? Yeah, arbitrage is not for me personally. Either way, like to buy and rent to somebody else, or I thank God I don't have any reason to do it on for the other direction. But in your scenario, great job, bravo. And just forget about it. At this point, you just forget about it, right?
Exactly.
Yeah.
Exactly. I literally don't even think about it. I feel like kind of a jerk saying it, but like when I get the money showing up in my account, I was like, oh my, yeah, like every month I'm like, oh yeah, I literally forgot about it because it was taking up so much of my mental bandwidth. I'm like, this is stupid. It's taking up space and it's not making money. Why am I beating myself trying to make this thing work? So I was like, let's simplify it. It's not sexy. It's not amazing. It doesn't make a ton of money, but it makes enough where I'm like, this is worth it.
Yeah, just forget about it. So, and how long has that been going on? You're happy with the relationship? You never hear from the dude?
Yeah, I hear from him occasionally, and it's like questions about the HOA. But he is so self-sufficient. Like he's doing it. He's doing it. And I'm like, man, if I can help this person get on their way to building out a portfolio because he's now gotten the experience to have the confidence to go out do it on his own, I'm like, awesome. And people are like, oh, well, you're not making a ton of money on it. Like, why don't you raise the rent? I'm like, well, because it's a symbiotic relationship. If he succeeds doing what he's doing, I succeed too. And so I'm like, I want to keep him as happy as possible, and he wants to keep me happy as possible. So it's a very symbiotic relationship that's worked out really well.
Yeah, I mean, my goal there, you nailed it. You crushed it. It's maybe a little unlucky that you got yourself into that situation to begin with, but you worked it the best way you could, and now we're to the point where we don't have to even think about this thing. We can move on to what's next. Bravo.
Yep. Yeah. Oh, cool. Thanks, man. I appreciate it. I was here like, oh man, I hope Luke doesn't just cut me down on my own show. This is going to be awful.
No, I would have done exactly what if found myself in that situation, I think you handled it properly.
Yeah. All right, cool, man. Well, I appreciate.
You won't have that problem next time.
I know. Hindsight's 2020. Yeah. So for the next one that goes sideways, you guys are going to be my first call.
There you go.
Luke, I'm curious. I want to end on this, man. Like, you talked about different markets and pivoting, and something that I always say when I'm chatting with folks and doing consulting and coaching is like, look, there will always be a better deal and there will always be a better market. So don't kill yourself trying to find the best deal or the best market. And if you're in this business long enough, which I hope everybody who gets into it is, every deal you do will be better than your last, or it should be at least, because that means you're building on the knowledge and building on the experience from those prior deals. So don't expect to hit a grand slam on your first deal. How do you not get analysis paralysis, or how do you coach people through not getting analysis paralysis? By trying to get the absolute best deal or find the absolute best market.
Shoot first, aim later.
I love it.
I've never had a problem with it, honestly. I'm very grateful for that. There's things that I definitely have weaknesses, in this business. Most of which I can hire out, the old Brandon Turner way of doing things, But I've never really had a problem with that. I just jump in head first and figure it out later. And I'm grateful for that. So it's almost like when I, because this happens so often, people are driving themselves nuts trying to figure out what to buy. And I'm just like, dude, it's not that big a deal. It's just a house. It's just a damn house. I mean, at the end of the day, even though you're doing vacation rental, short-term rental, overnight rental, whatever, you can put as many labels as you want on it. At the end of the day, it's just a house, so, how do I get over analysis paralysis? Shoot first, aim later. Just jump in. Even if you lose a couple bucks, who cares? You're taking yourself to school, and school is extremely expensive. But you
get a piece of paper at the end of school, not a house.
Exactly, 100%. I was not good at school, so maybe there's a correlation there. I was not good at college. I'm a horrible test taker, but man, in real life, street smarts, I've always just been, jump in and figure it out kind of guy. And it's worked great for me. So I'm grateful. I'm grateful to be a dumbass that can't pass a test.
It served you well in life. That's awesome. That's great. All right. Well, dude, Luke, this has been a ton of fun, man. If people want to find out more about you, the Short-Term Shop, your podcast, like what's the best way for them to do that? And where can they do it?
Yeah. The Short-Term Shop on Instagram. We have a lot of fun on there. I'm usually on there, every now and then telling some jokes and stuff, and the shorttermshop.com. And I have a podcast called Short-Term Rental Management, which is quite possibly the most niche down podcast in history. I love it, man. But it's a lot of fun. We just tell war stories about managing properties and all kinds of stuff like that, man. So yeah, the shorttermshop.com is where I'm hanging out. Sweet. Well, Luke, thanks again for taking the time, man. This was a total blast, and I am sure we'll catch up soon. My pleasure.
All right, everyone, that was our show. A big thank you to Luke for coming on. Really of just a fun person in general, above and beyond being super knowledgeable within the short-term rental space. Definitely go check out Avery's new book that's coming out here shortly. I think he said February 25 on BiggerPockets and Amazon. And as always, we love to hear from you. Ratings and reviews are super helpful, and we look forward to seeing you on the next one. Happy investing.